are the Bitcoin whales buying? This is a question that crops up every now and again. And in the community, there was a few questions I saw in the comment section of the YouTube video as well, in a Discord server, comments around whether or not the Bitcoin whales are buying. And well, in today's video, we're going to be addressing that. We're going to be taking a look at an article that first kind of picked up my attention to kind of what's been kind of spoken about in the community, and of course, by the crypto media. And then, of course, we're going to be taking a look at our on-chain data, and I'll explain kind of what's going on when it comes to Bitcoin accumulation, if Bitcoin accumulation is even happening, and all that good stuff. As I get into today's video, if you do find it useful and informative, smash that like button. If you are new to the channel, subscribe. And let's kick things off by taking a look at 𝗕𝗘𝗪𝗏. So this article here is an interesting one. Essentially, this is basically suggesting that Bitcoin's bottom slowly erodes as whale wallets increase by 3%. Okay, so kind of get that headline out there that maybe the bottom's in and, Bitcoin whales are accumulating, right? And this is all about how you kind of cut data, and how you cut the data gives you very different results. And I want to kind of really explain this in some detail today so that people don't necessarily just blindly follow or believe one particular narrative without breaking down what is the underlying data, and understanding the underlying data is very important. Okay, so in here, the first thing we can do, we don't really care terribly too much about what's being spoken about. We just want to see what the numbers are, right? And what's really kind of apparent here is how the data has been pulled together. Okay, so essentially you can query every single address on Bitcoin, it's a network, the blockchain, right, and see what the amount of Bitcoin is, right? How many BTC do each wallet hold? Now, when they do this, you can bracket the balances together, right? And so what they've done here is they've bracketed the balance between 0 and 0.000001, okay? And they're suggesting that there's a 60% change in the amount of wallets that hold this amount of Bitcoin. And the amount of change in Bitcoin is here as well. So the change of addresses, they're saying there's a 60% increase in the amount of addresses that hold 0.00001 Bitcoin. And that is 79.62% in Bitcoin percentage terms. Sounds really big numbers, right? Crazy big numbers. And then, of course, we go to from 0.00001 to 0.0001, 14.88% in address change, and 11.24% increase in the amount of Bitcoin held, right? And you can see the breakdown of these kind of smaller wallets. These are really small wallets, right? And you can see even down on this low side, 0.1 Bitcoin to 1 Bitcoin is a 2.81% in the address change, and 2.14% change in BTC. So in here, there's some interesting pieces of data, but one of the things that we need to understand is that they don't look at the number of wallets or the number of wallets that hold more than a specific amount of Bitcoin. It's between X and Y amounts of BTC. And so this is really interesting. It's interesting because this is a way of kind of manipulating data to suit a narrative, in my humble opinion, because this doesn't really take into consideration the movements of larger sizes selling off, and basically then the number of wallets will increase in the smaller sizes, right? Because that's how it's bracketed. It doesn't allow you to see a true linear kind of expectation, right? Instead, what you see is basically these kind of knee-jerk reactions in the market, these spikes up and down across these various different wallets. And it might look great. It's going to give you some crazy-ass numbers that are going to be really impressive, help you with your narratives if that's what you're trying to do. 1 week it could be 60%, and then the next week it could be down 50%, right? So it could be up 60, down 50, and that could happen within a 14-day period, hypothetically, right? And that's the issue that I have with data that is broken down like this. Now, as we kind of go down a little bit deeper, you have 1 to 10 Bitcoin, 10 to 100 Bitcoin, 100 Bitcoin to 1,000 Bitcoin, 1,000 Bitcoin to 10,000 Bitcoin, 10,000 Bitcoin to 100,000 Bitcoin, 100,000 Bitcoin to 1,000,000 Bitcoin. Okay, and then of course you've got percent wallet changes and percent Bitcoin changes. Now here you can see 1 to 10 is 0.35 on wallet change and 0.64 on your BTC change. 10 to 100 Bitcoin is a negative 3.13 on addresses, and negative 2.51 on the number of Bitcoin. Then we have the 100 Bitcoin to 1,000 Bitcoin, 1.59% up on addresses that hold that, and up 3.68 in the balance of BTC. And the 1,000 to 10,000 Bitcoin is what kind of is the attention-seeking part of the article, where it seeks for 3.43%. In address changes, which equates to 0.76% in BTC change. But of course, the headline is all about how there's an increase in 3%. So the wallet addresses between 1,000 and 10,000 has increased by 3.43%. Okay, then of course, 10,000 to 100 Bitcoin is down 3.88%, right? And you can see here, there's actually a positive change in BTC in this bracket, right? So although there's the number of wallets holding 10,000 to 100,000 Bitcoin is down 3.88%, the number of Bitcoin held by those fewer wallets is actually increased by 5.27%. Okay, so again, you can see how this data is all about trying to make something sound like something is happening when it's not. The actual message here should be that the number of, or the amount of Bitcoin held by 10,000 to 100,000 is actually increasing by 5.27%. And that would be the bigger kind of story. Then, of course, we can argue about what's going on down here at 100,000 to 1 million. There's no changes, so basically there's no new wallets, but there is an increase of 7.87% on the amount of Bitcoin held by those guys. So there's an accumulation happening at the larger size, but not so much on the smaller size. But we also have to really be very clear here that we are talking in percentage terms. And on the higher side, it's easier to get those percentage terms moving because the balances are going to be easy to move. There's only, I think, 3 wallets that have over 100,000 Bitcoin, right? Might be it's 4, but we'll have a look at that in a second. And therefore, it's actually easier to kind of move, an extra 10,000 BTC and move that needle in terms of percentage points than it is going to be to see larger percentage movements on the smaller side where there's maybe, 10, 20,000 wallets, for example. Okay, so it's a very interesting kind of article, but it is one that, if you just take a look at the numbers, it doesn't make a lot of sense. The communication, though, is on point, and I want to stress that, right? In the actual article itself, they are talking about, essentially how we are seeing, basically larger investors selling off, and there's only really a little bit of accumulation happening at the small retail side. Okay, so this is really important stuff. Obviously, I wanted to kind of address that we can't just take this at face value. It's not actually that meaningful. And that brings me over to our data that we run on our membership platform, right, which is on-chain data that we query and that I try to pull out and analyze this data differently. I don't just take this approach of bracketing things because, as I said, it creates those knee-jerk reactions. Instead, we try to take a look at this through a different lens. Now, obviously, we go to the network analysis briefly. We know that the number of addresses for BTC sits at 53.1 million addresses, right? So that's how many addresses there are on Bitcoin's network. Now, if we come over to the wallet analysis, on the really small side, there's only 24 million wallets that have more than 0.001 Bitcoin. So basically what I've done here is I said I don't really care about anything less than 0.001 because it's kind of insignificant. It's dust. It's not really a meaningful investment. We only really care about wallets that have more than 0.001, and even that is a bit of a stretch, right? We're talking 1/10, well, actually 1/100th of a BTC, right? It's kind of a really, really, really small amount. So this is like entry level stuff. And there's 24.3 million wallets. That means that there are actually over 50% of total wallets actually have less than this. And it's kind of a really kind of scary number to think that there's that much dead wallets out there for BTC. As we kind of crank through these numbers, though, we can see some interesting things. It's relatively flat, right? We can see that this did peak back in late December 2023 on the smaller side. And they actually had some selling off pressure here, and that hasn't really grown at all. We can see in the last 365 days, it's actually only increased by 0.82%. Okay, so we know that actually the number of wallets are not growing in that kind of sense. And this is greater than, okay, and that's also something that we need to stress. That means that the number of wallets have only grown by 0.82%. If they've got more than 0.001 Bitcoin. That means that we're talking about whales in the same kind of ilk, but we're talking percentages, right? If we take a look at hard and fast numbers, we are talking about going from 24,132,000 wallets down here, this number, to 24,329,000 wallets. So we've had a couple of 100,000 new wallets getting created in the last year. Now, if we crank this up to 0.01, okay, so now we're kind of getting to those kind of nitty-gritty points. Here, there's only 12.6 million wallets, and they have grown by 1.74% in the last year. In the last 14 days, they're actually down 0.1. In the last 7 days, down 0.16, and so forth, right? So you can see that it's not massive growth going on here for kind of the smaller side, the retail side. Now, if we go into 0.1 Bitcoin or more, okay, so we're talking 10% of a Bitcoin now. These are 4.5 million addresses, and there's a 1.89% increase in the last year for the retail side. Now, everything, these first three levels, 0.001 to 0.01 and 0.1, these are all kind of your retail levels. I would also kind of say that the 1 Bitcoiners are also retail investors, people who aspire to hold at least 1 BTC. There's just over 1 million wallets here. Okay, this peaked out again back in early 2024, so January 2024. Then there were 1.02 million. There's actually 1.014 now. Okay, it's down 0.7% in the last year. Okay, and of course we can see that the last 14-day trend is also there. So we know that there hasn't been a huge amount of accumulation at the kind of lower side of the retail side, and that's because there hasn't been enough liquidity. Retail investors being kind of pinched. That's the whole point of the interest rates staying as high as they have been, is essentially just to suck up the liquidity out of the market. There isn't a lot of disposable income to be throwing at the market. We see that with credit card delinquencies over in the US. Hypothetically, we've been through that news recently, and of course, you know, we're seeing very similar things in terms of the amount of accumulation happening at the lower side. It just simply isn't happening. We get into the high net worth individuals at 10 Bitcoin or more, 153,000 wallets. So we've gone down pretty steeply here. Okay, you can see this within the data. We're down 2.56%. Okay, and that happened pretty much towards the end of 2023. So as price was rallying here, they were using that as exit liquidity, and they've come out. So high net worth individuals have really kind of pulled out of the market here. Okay, so we can see that retail investors haven't really accumulated much because the liquidity hasn't been there, and we've seen high net worth individuals pulling out of BTC in terms of wallets. Now, what we don't necessarily know is whether or not these guys are selling off their actual Bitcoin holdings in favor of ETF shares. That's another possibility, specifically when we start going up into these higher levels, that you might actually start seeing. Why bother holding the risk of basically, you know, having to deal with the actual cryptocurrency when, as a high net worth individual, you could just go straight into your investment bank or whatever and basically just say, I want iShares, you know, from BlackRock on BTC side of things. And therefore, you know, we could see a noticeable decrease in the wallet counts here for that purpose. But as the data is the data and we don't know the rationale behind it, we can just see there's a decrease here. Go into 100 Bitcoin or more, there's only 16,000 wallets, and you can see these guys are more actively in and out of the market. I've kind of spoken about these guys being more like traders. You can see the black line here basically going up and coming down, and you can see it kind of follows a little bit of what's going on with the price action, right? These guys are up 1.93% in the last year. Again, you have your 14-day trend, also very similar. So for the most part, not too much going on. Then we get to the whales, right? 1,000 Bitcoin or more. We're not saying between 1,000 and 10,000. We're just looking 1,000 Bitcoin or more. And well, we can see there's a little bit of growth in the last 365 days at 2.74%. But for the most part, we're actually seeing selling off. We're not seeing accumulation. And we can take a look at this on the smaller time frames as well. Okay, so in the last 6 months, they're down 1.38%. In the last 3 months, down 0.15. Last 60 days, down 0.15. Last 30 days, down 0.34. Last 14 days, down 0.19. Last 7 days, down 0.53. Okay, 2,000 wallets remaining here. Now, they peaked out back in February of 2021, right? We saw good growth into that bullish market, and they've been selling off into the bearish lows that we saw in December of 2022. They continued to sell off even as we started to get some recovery into 2023. They started to accumulate early 2024, and then they've started selling off as we reach into those all-time high areas back in early 2024. and they haven't really been buying back since. Now, this method of looking at the data is obviously very much different to what we're seeing from the way that it's cut up here. Between 1,000 and 10,000, there's an increase of 3.43. But when I have my data looking at only things that are greater than 1,000 Bitcoin, it takes into consideration any larger players like 10,000 Bitcoin, 100,000 Bitcoin, and any major moves they're making. Okay, we can see that inside the data. Whereas on this point of view, you have to look at each one individually. Okay, and as such, we can see that there's a 3.88% decrease in number of wallets holding 10,000 to 100,000, whereas mine comes out more flat because it takes all of that into consideration. Okay, if we crank this up to the 10,000 Bitcoin or more, you can see these guys have been aggressively stitching Bitcoin since November 2022 into this move to the upside to the all-time highs. You can see it's down 3.74% in the last year, down 0.96% in the last 180 days, down 2.83% in the last 90 days, down 0.96% in the last 60 days. It did jump up in the last 30 days by 3%. And then in the last 14 days, you can see some accumulation happening. Okay, so what we're seeing is we're seeing some selling pressure from retail investors, and we're seeing some accumulation at the $10,000 or 10,000 Bitcoin or more level. But we're seeing selling pressure pretty much from the whale investors on the low side as well. So we can see that large investors, really large investors, 10,000 Bitcoin or more, are making some strategic moves to accumulate during the most recent pull to the downside, specifically in the last 30 days, right? We can see that. Whereas our whale investors, slightly less wealthy individuals, but still wealthy over 1,000 Bitcoin, they're not making the same kind of moves. Crank this up to like your micro strategies where we talk about 100,000 Bitcoin or more. There's 4 wallets. There's only 4 wallets that have 100,000 Bitcoin or more. Okay. And there's 0 wallets that have 1 million Bitcoin or more. Okay. So it's really important that we understand that there's only 4 wallets and they don't really make big major movements outside of the 100,000. Now they could be accumulating. They could be sat on 150, 160. We're not going to be able to monitor those changes because the next bracket obviously is 1 million, right? But there's 4 wallets here, and we can see that some of these wallets do occasionally sell off a little bit of their Bitcoin and they drop down lower than the 100,000. Okay, and it fluctuates. You can see them coming in and out all the time. So a year ago there were 4 wallets, no change. 180 days ago, there was only 3 wallets, so we actually have now got a 33.3% increase. Same in the last 90 days, there were 3 wallets, we've gone up to 4 wallets, and since then, there's been no changes. So in the last several months, no real changes. So it's important that we understand these things, and why I wanted to kind of speak about this in today's video was mainly because obviously this article can be a little bit misleading. It doesn't give you the kind of full picture, and we of course can see the kind of comments in the videos and in the Discord server with people trying to understand, what are the Bitcoin whales doing? Well, the actual whales themselves are not really that active. The larger players, the kind of 10,000 BTC or more, have been aggressively selling off, but that could be about to change. It does look like in the last kind of 30 days or so, they've actually started to accumulate again. Is this now meaning that we're likely to find a bottom soon and we're going to see a reversal for Bitcoin? Quite possibly. But you guys can let me know what your thoughts are on all of this in the comments down below. Where do you think Bitcoin's price is heading on reflection to all of this data? Let me know in the comments or join us in our free Discord server. We would love to hear from you. And you guys, if you haven't done so already, check out this video right here. It's not one you're going to want to miss.